My name is Jeffrey Fidelman. I run Fidelman and Company. We are a 40-person management consulting firm focused on strategy and finance for early to mid-stage businesses. My background, I graduated Harvard. I spent 5 years in banking. Half of that was at Morgan Stanley and the other half was at HSBC. I was then pulled out by a family office to help them structure a venture capital fund. So I was a partner at a venture capital fund. We were making early stage investments in tech and tech-enabled businesses. And after the first fund was allocated, the family decided to go in portfolio management mode and reinvest proceeds as they came out. So I'd left and started consulting. At the time, I didn't even consider consulting, more advising on some of the portfolio companies of that fund. And that was around 2015. And slowly, I began to get referrals. I began to bring on additional consultants to help me with some of the deliverable work, designers and analysts, and then later on, full-blown consultants. And fast forward 7 years later, that's where our 40-person consulting firm is at now. No, I don't think so. Well, I'll put it this way. I always had an interest and I always knew what I wanted to do, which was help businesses grow. I just could never figure out how to do that. So I went down the banking and finance route and didn't really feel fulfillment there. I went down the venture capital route and I didn't really feel like we were making enough of an impact just as investors. And when I began consulting, I saw that, especially with strategy consulting, I saw that we really could be a lot more impactful to a business, its direction, the business plan, the model, prior to that company ever being formed, let alone raising additional capital down the line. So I kind of always joke that I started a consulting company without ever having had any experience with consulting, but 7 years later, making it on Inc. 5000, I think there's something to be said about that as well. Well, look, I think, daily grind, what does a daily grind mean? Daily grind is when you don't enjoy what you do. And I always say that I think I'm really fortunate in that I was basically able to create a job for myself, doing what I really enjoy doing, which is working with such a variety of businesses. And I'm just looking at our client list now. We have a NFT project, very well known. We have a payment processing company. We have a cannabis business. We have financial services. We have a veterinary clinic in the country of Kuwait. We have a natural gas pipeline in Riga, Latvia. Our firm's clients range almost every single industry, almost the four corners of the earth. And what I love doing is looking at my schedule and having every hour of my day focused on an entirely different business. Maybe some people, or maybe most people, wouldn't necessarily like that, love that, be able to do that. Perhaps it's just how my own brain works, but I absolutely love speaking with just such a variety of businesses. And honestly, it allows me the opportunity to learn every single day from each and every single clients that I have, passing that information on to future clients that I will have. Nothing that was unexpected, I'll put it that way. One of the largest businesses that we've consulted on, I would say, is a company called Applyboard. I think we were helping them with either their seed or their Series A several years ago. They recently raised $300 million at a $3.2 billion valuation. But if you're asking, is there one? It's not so much of one. It's what is the most recent successful client that you've had in either raising capital or selling their business or something along those lines. And although we don't raise capital, we don't solicit investors on our clients' behalf, I'd like to think that after working with us, the chances of success in whatever capital transaction that was being contemplated increase exponentially. Tough is relative. I think one of the best lessons I've learned, and I don't necessarily know that saying it now is easy to say. Hindsight is 2020. So whoever is listening to this, take this with a grain of salt, but try to focus on what you're really good at doing and not adding more features and trinkets and additional service offerings to whatever you do as a business. And I say that for consultants out there, for entrepreneurs out there, for businesses out there that are large and scaling. One of the biggest mistakes that I had continued to make, and I'll likely, maybe even continue making depending on the circumstances, is straying from a core offering. And if one or two clients want something, trying to figure out how to service them. And then 3 or 4 clients want something, maybe try to service them. And then you're always forced with, well, do I include this in my marketing? Do I start building this out as a separate business, as another offering? Or now that those clients are done with me and I have this capability, what do I do with it? And more often than not, if your business is doing well, it's likely doing well because of your core service offering, not because of that additional feature that you happen to provide to a client or a customer or two. So toughest challenge or toughest thing I've learned is that if you have a core offering, 80-20 rule, some people would call it, but if you have a core offering, just stick with that core offering and try to figure out how to make that core offering better, as opposed to, well, let me add another offering to that core offering and we'll sell them as a package. That rarely works the way that it's intended to. You don't need money to start a business. You don't need investment to start a business. Look, I say that tongue in cheek. If you want to start I don't know, an airline or some sort of like freight carriers, then yes, you need a bunch of money to build a plane or like own a container and ship it across the world. But if you're starting some sort of services business, if you're starting any type of online business that doesn't require you to actually manufacture a product, don't spend money on branding or things that you think you need to go out to raise investment. When investors are looking at a business, they're looking at the viability of the business. So if you have an idea for a business and you want to start it, don't let lack of capital get in your way. Again, everyone needs to take this with a grain of salt. Lack of capital should never be a preclusion to starting a business. You could always use an Excel sheet. You could always use a pen and paper and do something manually for organizational purposes. But usually you can test a product or a service without spending too much money on getting it out into market. And that, when starting a business, should be the number 1 goal of that business or of that entrepreneur or of that founding team or whoever that is. It's not, don't build a field of dreams. Don't build it and assume they will come. Have an offering, have an idea, and just go out and start making phone calls and pitching your idea. And if people like it, great. If people don't like it, then start iterating until you figure out what people actually want to buy from you, as opposed to, I think this is what people want to buy. Now let me build it and try to sell it to them. And I think that's one of the most common mistakes that I see entrepreneurs making still to this day. It's not having a go-to-market strategy. It's building something prior to there being an actual market need or demand or test of demand. Generally speaking, yes, right? Like whatever the company is, more or less, there's usually a way to, at the very least, gain user interest, customer interest, prior to doing a full-blown go-to-market launch and strategy and all of that. Services are obviously much easier because you don't have to manufacture or create anything in order to sell it. On the sales side, still, there are ways to have like prototypes or pretotypes, basically, to just inform what is buyer or customer interest on that product. I think if it's working, there are natural indicators of growth, needing additional bandwidth, needing to hire, needing to expand, needing to bring on more sophisticated services to manage your business, going from pen and paper to Excel, from Excel to QuickBooks, right? And so on and so forth. If something is not working, a lot of entrepreneurs and a lot of investors even have the sunk cost effect feeling, where they're thinking just one more month or 2 more months and 1 more quarter, 1 more year, and this will all turn around. And I'm not necessarily saying that you should like cut the head off of whatever's not working immediately and trash it, but it is important that the moment you identify something is not working, to understand why. And that should be your main goal. Why is that not working? And you should be open to pivot. Be open to change. Be open to the fact that your idea might be really, really great in your mind and not in anyone else's. And it might have nothing to do with the way you're explaining it. It might have nothing to do with anything other than it's just not a good idea or not executed properly, or should be shared with more people so there can be additional collaboration and intellectual capital put behind conceptualization of that idea. I'd like to think we offer that as consultants a lot, right? It's the strategy. It's, well, I've worked with 300 startups in the 7 years that I've been a consultant, let alone when I was a banker, let alone when I was a partner at a VC. I've seen almost every single business model out there, right? Regardless of a product or service being sold. So at the very least, bring someone on, me, anyone else that has similar experience, to play devil's advocate, to act almost as an advisor and ask you all the questions that an investor is going to ask you prior to actually going into that meeting. Because just, without testing a strategy, and again, what I'm talking about is for early stage companies. If a company is launched and generating revenue, then it's more about, well, how do we make this more efficient rather than how do we make it work? But in both cases, in all cases, and I say this knowing that I'm being recorded, what I think does not matter. It's what the customers of your business think. That's ultimately what matters. And as long as you're open to asking the question and you're open to an answer that might not be the same as yours, you being the entrepreneur or the business or whoever, I think that's really what people should think about. And the biggest problem, to come all the way full circle back to answer your question, the biggest problem is those entrepreneurs not being open to that, and not being open to change, and not being open to pivoting or updating or letting go of their precious idea because it was theirs.